gold will break down. Say goodbye to gold 4,000. A sell-off is coming. But according to a very rare but very precise chart pattern, this will be the final sell-off before we go much higher in gold. But if you invested in gold, or you want to buy gold, or you want to buy the mining stocks, you need to see this video because you need to know what will likely come according to this chart pattern. Be ready to have your mind blown. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Helmy, and let's jump right into the gold price. As you can see, big sell-off today in Asian and European trading. So far, nothing has happened. The drill 4,000 is the line in the sand, but a new chart pattern is now revealing itself. And if its structure plays out, we can say goodbye to gold 4,000 because a sell-off is coming. However, this sell-off will be the mother of all fakeouts before we go much higher in gold. All right, let's start with this chart formation. And let me move my ugly face up here. This pattern is called the Wyckoff. I know, I've heard all the jokes. The Wyckoff accumulation and distribution pattern. It's a very specific pattern of movements that happen in a very specific way. It has 4 phases, not the phases you see here. 4 phases overall, more like market cycle phases, right? It comes up at the end of a big rally in Wyckoff, that's called the markup phase, or after a big correction / crash phase, which is called a markdown phase in Wyckoff. Well, we can all agree we definitely had a correction in gold, with gold being down 30% in about 6 months. So that fits. What does the Wyckoff pattern stand for, and why is it so interesting? Well, it was developed about 100 years ago. It still holds up. It commonly repeats itself. Again, very important to understand, because this is what a lot of people get wrong. It repeats itself after rallies and corrections. It doesn't happen in the middle of trends. And it shows the buying or the selling of the smart money to the main investors on Wall Street and in the markets. Could be private investors, but also could be banks, or could be dumb money, even a lot of funds, all sitting in the boat. And in order to buy up the large positions or sell the large positions of the smart money, because they're holding big positions or they want big positions, they are hiding, and this is the important part, they are hiding their intentions and their purchases or sells over time with a lot of fake outs and fake signals that irritate the market and that hide what they are truly doing. So, for example, in a rally phase, at the end of a rally, they do make a few more fake highs to suck in more of the private investors and more of the dumb money in order for them to sell their, could be equities, could be a currency, could be crypto, could be commodities. In our case, we're looking at an accumulation pattern. So the smart money is buying. So they're tricking the main investors into selling, and they're hiding their buying through a number of fake signals. That is the background of Wyckoff accumulation and distribution. And if you understand that, and you can read the pattern, and you see the pattern early enough, you'll be on the right side with the smart money, and even more important, you will get in early. The problem with the Wyckoff accumulation or distribution is that in the beginning, it looks like every other chart pattern. There's nothing specific about it. It needs time to develop before we can see, oh, this could be a Wyckoff accumulation. And here in gold, as you will see today, this is exactly what is happening. Be ready to have your mind blown. So let me explain to you how Wyckoff works with this graphic, courtesy of Kegel Trading. Really good graphic, really good description of Wyckoff. However, if you want to read that description, it's going to be in crowd language. So if you don't speak crowd, it's going to be a little tricky. But, very precise, just the way the Germans like it. The graphic is way more complicated than it needs to be. But okay, that is what we do here at Hot Trades of Today. We take complex market situations and explanations and try to break them down easy to understand. So forget the phases on top. Not important. We go left to right. So you see a bunch of letters, looks like a fraternity row at a college. We're going through them, and I can tell you which things you need to pay attention to. So the PS is the preliminary support. After that, we get a bounce, and then we get the selling climax. So the selling hits its peak, it's panic selling. After that, we get an automatic rally, so a rebound. And then, and now things get interesting, the selling climax on the bottom, SC, and the AR, the automatic rally, they define the range in which, in this case gold, will be trading for a while the smart money is accumulating their positions. Wyckoff accumulation and distribution patterns work best on daily charts or even weekly charts. So we're talking, this is long-term. This is no short-term trading. This is long-term swing trading. Actually, in most cases, they are positioning themselves with investment positions for a longer markup phase, or rally phase as it's known in the general public. So we're getting into phase B. So we mark the AR, so the high of the rebound, and here comes the first fake out. We are making a new low below the selling climax, but it's a fake out. You can see it there. Whoop! We jump right back into it. We rally. Great. However, we're making a lower low. This low after the fake out is not as high. This is important. Not as high as the first high from the automatic rally, from the first rally after the selling climax. Why is that important? Well, because if the market turns here, it's still in the range. The main investor base will say, well, nothing is happening here. I don't need to buy. Instead, smart money is pushing the market down, and here comes the big one. It undercuts the previous lows, and it comes to a final sell-off. This is called the spring. You can see it here in the beginning of phase 3. This is the biatch. It undercuts the previous lows. It leads to panic selling. It leads to margin calls. It leads to stops getting triggered. And the smart money is just like the Tasmanian devil on the Looney Tunes. It's just gobbling up all the positions it can get. Because everybody's selling at panic. But this sell-off, and that's why it's called the spring, is the springboard of the turnaround. So the final phase of the Wyckoff accumulation of the smart money. After this, we're going higher for a while. And then once smart money has fully loaded up their positions, we're going into a new rally phase / markup phase in Wyckoff, as it's called. And, well, Main Street, again, is getting on board way too late. So if we can define and find a Wyckoff accumulation early, and that's usually in the middle of phase B, then we can get in really early and on the same side with the smart money and make the biggest profits. So this is Wyckoff in a nutshell. We don't need to pay attention to everything. Not every little up and down here that you see is important. What's important are the endpoints. So SC, the selling climax, the rebound, the AR. Then what's called here the ST, the fake out low. And then really important also in the middle of phase B, you see here, the lower high, which then leads us into the spring sell-off. Now let's look at gold. And I'm going to give you two charts. Here is the first one. Now, let me zoom out here real quick. This is the chart since 2026. Well, we can definitely all say that we had a massive correction or a markdown phase in gold. We're down 30% in about 6 months. That definitely fits the description. And again, we have to remember that Wyckoff was developed 100 years ago when trading was not automated, not with computers, so everything took longer. So now things happen a lot more condensed. Now let's get into the details. And this is where things get really interesting, and I have a gold chart for you. Ooh, that one will be one of the best ones we have had on this channel in a while. I'm pretty sure that's where you're going to come down on this. All right, let me move my ugly face down here. Okay, so here we go. So we have the markdown. Then, actually, let me move here because this is important that you see the March low, the intraday March low. We have the sell-off, and here we get the preliminary support, which is coming basically from this low. We undercut it a little bit, but only for basically a day and a half. So we have the preliminary support here. Remember, we went down to 4,000, I want to say like 25 or 30 or something. Yeah, 23. 4,023, and everybody's like, that's close enough for government work. Almost 4,000. Let's go. We get the rally just as the Wyckoff graphic that I just showed you signals, and then we get another sell-off with a lower low intraday and on the close. The closes are what's important to me. So this is the selling climax. As you can see here, the volume is higher on the buy side here at the selling climax. Overall, the volume is getting lower the longer this phase is going on. This is exactly what we want to see. Yeah, we got a couple of rally days with high volume, but overall the volume is pretty low, as you can see. This is what we want to see. This is what the Wyckoff patterns say. The reason being, the smart money is cautiously buying. Remember, they're trying to fool us. They're trying to fool the main street. And the main investor base is not buying. So we see this here. You can see on the buying days, not much is happening. So that doesn't fit 100% because we have these high selling days, but that also correlates with geopolitical developments. So that's a little different. Overall, that's good. That fits the pattern. Not perfectly, but fits the pattern. But what fits the pattern perfectly is here we have the low, the selling climax. We get the rally called AR, or automatic rally. And then we get the second sell-off and we make the lower low fake out. And as you can see here, it happened with big volume on the close. Remember, faked out, went below 4,000. And then we get the second rally and look at this. We did not even make a new high. We made a lower high. What did I just tell you in the graphic? Let me show you the graphic again. Man, I gotta move this thing around. Like, here we go. All right. Selling climax, rally. Basically this part all together right here. Undercut, fake out, what I just showed you, rally, but it's lower. It doesn't go above the AR rebound. And what would be next? It's the sell-off. It's the sell-off with the mother of all fake outs going below the support area, which is $4,000, and then triggering all the stops, all the margin calls, all the panic selling, and the smart money is buying it all up. So, what has happened in the past days? After we did the undercut fake out, rally, but it's a lower high, just as it shows in the Wyckoff graphic, and now we're drifting lower. That fits perfectly. Now, before I show you the next graphic, I have to say, this final fake out with the undercut, where we would go down then to 3,750, 3,600, maybe 3,500. That doesn't happen all the time in Wyckoff, but it happens a lot. And I'm pretty sure the smart money will try to make it happen because they know there'll be a lot of selling pressure, meaning they can grab positions for cheap if they are able to push the gold price below 4,000. Now, here comes the chart that I want to show you. This has, let me take the volume out. All the Wyckoff accumulation signals and the fraternity row in one that I just showed you. And we can see again, it's the exact same chart. As you can see, here's the downtrend that started in March, right? And as you can see, it is absolutely wild how accurate it has been so far. Here's the preliminary support that I just showed you, right? Based on this low from March. We get the rebound just in the graphic. Look at this, gold price going down to 4K. We make the selling climax. We get the rebound, the AR, the automatic rally. We get the undercut here on the close. We get the second rally, right? But it is what I call, right? It's a lower high. I don't know why it says T there. All right, doesn't matter. It's a lower high. That's all that matters. And what that would mean is, that's why this is in the black. This is already in the book. So we got hit on 1, markdown phase. Hit 2, hit 3, hit 4, hit 5, hit 6, hit 7. Now we have 7 points of the perfect Wyckoff accumulation pattern in a row that exists that hit. Plus the volume, very close. I mean, I don't know what you call this. I don't call this a coincidence anymore. So in gray, you see what would happen next. It is we break below 4,000, we get the sell-off, and that sell-off then turns into the spring standing springboard for the start of the next markup phase / rally phase. So we would therefore, from the sell-off, then jump back above 4,000, the blue support zone. Remember what I told you before. The SC and the AR make up the range in which gold trades. And interestingly enough, that is exactly the range that I've been defining for a while, which is 4K on the downside and about 4,200, 4,215 on the upside. So we would jump above 4,000. We would then retest 4,000. That retest is successful. And that is the 100% signal for the completion of the Wyckoff accumulation phase. And then we know what's going to happen after this, which is they going to take a little longer to accumulate a little more positions, but eventually we are going higher. I haven't seen anybody talk about this yet, and I understand why. As I said before, it's not an easy formation to understand. It doesn't happen as often as you would think. But when you have 7 cornerstones of the Wyckoff pattern, how it ideally looks, and the ideal perfect scenario, all 7 hit. I mean, you don't have to listen to me. I'm not your financial advisor. Maybe I'm just crazy conspiracy guy here. I think smart money is in the gold market and they're fooling everybody. So what does that mean for us? Well, we don't know if the spring sell-off will happen. It would have to go below 4,000. So I'm still cool with the positions I bought, but boy, am I happy that I'm holding this big amount of liquidity, which I then gonna deploy in a large percentage, and that's my personal decision, doesn't have to be your decision, if we get the spring sell-off. And then obviously the rest I gonna buy if the retest signal comes. Woo! That was a lot to digest. You may even have to watch this video a couple of times. If you like this type of content, hit the subscribe button so you don't miss any of the videos. Quick housekeeping note. If you saw the Rick Rule interview last week, I know a lot of you did, it went, I mean, kind of viral, and we're really proud of it, to be honest with you. I told you I thought it was really good. In Saturday's newsletter video, I'm gonna go into detail what it really means in practical terms, what Rick was saying. So how should we structure our portfolio? What should we do? What am I going to do? You might do something completely different. The newsletter, the VIP newsletter, is for free. You can sign up. Doesn't cost you anything. We're not going to spam you. Link is in the comments. Okay, that is it for today. We will see if this pattern that you see right here of the Wyckoff accumulation holds. And again, the signal will be we break below 4,000. And then you will see the people coming out with, we're going to go down to 3,500 or 3,000 or 2,500, 2,400, blah, blah, blah. We know if that happens, it's the big fake out of the smart money. And we have the chance to be on the right side with them. Have a great day. Talk to you tomorrow. Bye-bye.